The United States of America, the richest nation on earth, is now drowning in debt. $37 trillion, a number so large it could wrap the world in $100 bills more than 50 times. And yet, Washington keeps spending, the Federal Reserve keeps printing, and the global markets keep pretending everything is fine. But what if it isn't? What if the next great financial reset is already underway? Not with guns or gold, but with code. Some economists call it a digital harvest, a massive shift where debt, currency, and control are merged into one digital system. A system that could quietly wash away trillions in U.S. debt under the guise of innovation. They say it's about efficiency, transparency, progress. But behind the screen, someone always collects the data and the power. Tonight we unpack the unthinkable. Is America on the verge of default, or leading a digital debt revolution that will redefine the entire world? To understand why some believe America is heading toward a digital debt reset, we have to start with one simple, terrifying number: $37 trillion. That's the total public debt of the United States, the highest in human history. For every American citizen, that's more than $110,000 of debt, and counting. In 2025, the U.S. government adds roughly $1 trillion of new debt every 100 days. The curve is no longer rising. It's exploding. How did we get here? Wars, tax cuts, stimulus checks, interest payments, all funded by borrowing. Over decades, the United States built a lifestyle of debt so enormous that even paying the interest now costs more than $1 trillion per year. That means Washington spends more on interest than on national defense, education, or healthcare. And those interest payments are rising fast because rates are no longer near zero. For decades, the world trusted U.S. Treasuries, the government's IOUs, as the safest asset on Earth. Japan, China, and global banks used to buy them in bulk. But in the last few years, something changed. Foreign demand has quietly declined. Major buyers have stepped back. And yet the U.S. keeps finding new ways to sell its debt. How? Partly by turning inward. American banks, pension funds, and even new digital players are now absorbing more of Washington's IOU cess. The world's most analog instrument, government debt, is being pulled into the most digital age in history. It's no longer just about bonds and banks. It's about code, tokens, and algorithms that promise liquidity and quietly blur the line between real money and digital promises. The question is, are these innovations saving the system or setting it up for a massive reset? While America's debt mountain keeps rising, a new kind of money has quietly emerged from the shadows. Digital money. Most people think of cryptocurrency as Bitcoin, volatile, risky, decentralized. But that's not what we're talking about. The real story is about something far more stable and far more connected to Washington itself. They're called stablecoins, digital tokens that mirror the value of the US dollar, backed by real assets like treasury bonds and cash reserves. On the surface, they seem harmless, just faster, smarter versions of the dollar for the digital age. But under the hood, they're reshaping who actually owns America's debt. Take Tether and Circle, two of the world's largest stablecoin issuers. Together, they hold tens of billions in U.S. Treasury bills. In fact, by 2025, stablecoin companies collectively own nearly 0.5% of all U.S. government debt. That's more than the holdings of countries like Germany or South Korea. Think about that. Private crypto companies, not governments, are now financing the United States. Every time someone buys a stablecoin, a digital dollar, somewhere, a piece of America's debt is being bought in the background. This is the quiet convergence of the old and the new, where traditional debt becomes digital liquidity. And it's no coincidence. The U.S. Treasury loves buyers who don't ask questions. Stablecoin issuers love treasuries because they offer safe returns. It's a perfect symbiosis. But here's the twist. As more money flows into stablecoins, more of America's debt is absorbed by an ecosystem that is barely regulated, borderless, and run by private entities. If anything goes wrong, a hack, a collapse, a loss of faith, the shock won't stop at Wall Street. It will ripple through the entire digital economy. Meanwhile, the Federal Reserve is watching closely. Behind closed doors, the U.S. is studying its own version of digital currency, the CBDC, or Central Bank Digital Currency. It's not a crypto token. It's a direct line from the government to your digital wallet. Fast, efficient, and completely traceable. Officially, the goal is to modernize payments and increase financial inclusion. Unofficially, it could be the foundation of a new financial order, one where the line between money, debt, and data completely disappears. Imagine a system where every transaction is visible, every debt tokenized, and every dollar tracked in real time. Governments could monitor spending instantly and adjust the money supply at the push of a button. To some, it's a technological miracle. To others, a digital trap. Because in this new architecture of money, debt doesn't vanish. It mutates. It flows through servers and algorithms wrapped in blockchain code that few truly understand. This is what some economists call the beginning of the digital harvest, a global process where financial power is replanted in the digital soil of a new economy. An economy where every token of value, from your salary to your savings, could be tied to a debt someone else owes. The question is, who's harvesting whom? Now we arrive at the heart of the theory, the so-called digital harvest. A claim that the United States, buried under $37 trillion of debt, is using digital currencies to quietly wash that burden away. Is it true, or is it just another economic ghost story? Let's break it down. First, the rational part. America needs buyers for its debt, always. And now new players have appeared, stablecoin issuers, crypto funds, and digital asset banks. Each time someone mints a stablecoin backed by U.S. Treasuries, Washington quietly finds another investor. In that sense, yes, digital money is absorbing part of the national debt. But here's where the line blurs. Buying debt is not erasing it. Those treasuries still exist. They still need to be repaid. What's really changing is who owns the IOUs. Instead of foreign governments, it's now a network of digital institutions and millions of crypto holders spread around the globe. The risk has been redistributed. The debt remains. Some call this financial alchemy, turning paper debt into digital gold. Others see it as a clever form of outsourcing risk, a way to export America's liabilities into a system that no one fully controls. And that's where the fear creeps in. Because if stablecoins are the digital veins of this new system, what happens if the heart stops beating? A single collapse, a hack, a regulatory freeze, a loss of trust, could freeze billions in instant liquidity. The shock would travel faster than any bank run in history. Then there's the deeper layer, the one whispered about in policy circles and finance forums. What if digital currencies allow the United States to reshape its debt structure entirely? Tokenize it, reprice it, reissue it in forms that no longer look like traditional bonds. In that world, trillions could move off the visible ledger and into the blockchain, a shadow balance sheet disguised as innovation. To the average citizen, it looks like progress. To a strategist, it looks like a reset button. Yet let's be clear, there is no public proof that Washington is laundering its debt through crypto. What exists is a trend, a migration of debt ownership from the traditional system to the digital one. A shift of control, not an erasure of obligation. But history tells us something important. Every financial revolution starts with a promise and ends with a power grab. Paper money was once a revolution. So was credit. And now, digital money is next in line. The digital harvest theory isn't about erasing debt, it's about harvesting trust. Convincing the world to accept a new form of value so that the old one can quietly decay in the background. Maybe that's the real plan. Not to default, but to evolve. To shift the entire weight of American finance onto a digital foundation before the old system collapses under its own gravity. If America is leading the digital harvest, the rest of the world is already caught in its orbit. Because when the dollar evolves, everything else must follow. For decades, the U.S. has relied on one invisible weapon, the dollar's dominance. It's the currency for oil, for trade, for debt. And now, that power is being reborn in code. Every stablecoin pegged to the dollar, every crypto exchange that uses U.S. treasuries as collateral, is another root in a vast digital empire. To most users, these are just apps, wallets, or tokens. But underneath, they're pipelines, feeding liquidity, data, and control back to Washington. The digital dollar isn't conquering with armies. It's spreading through algorithms. And China saw it coming. That's why Beijing built the ECNY, its own central bank digital currency, a firewall against the American blockchain. Europe is testing the digital euro. India, Brazil, Russia, all racing to build sovereign digital money before they get locked inside the US system. It's not just an economic contest anymore. It's a monetary arms race, the battle for who writes the next operating system of global finance. And as always, the developing world stands in the crossfire. Nations already drowning in dollar-denominated debt now face a new dilemma. Accept digital dollars, faster, cheaper, easier, and become even more dependent, or resist and risk being locked out of the global payment grid entirely. Imagine a future where access to money itself can be switched off, not by banks, but by code, where every transaction leaves a data trail owned by someone else, where national sovereignty depends on who controls the algorithm. This is the real fallout of the digital harvest. The technology doesn't just move money, it moves power. The US may never need to default the old-fashioned way. Instead, by turning its debt into the foundation of a digital economy, it spreads the risk across the planet, turning creditors into users and users into data. In the end, it's not about dollars or tokens. It's about dominance. Who gets to define what money even means in the 21st century? So, has America failed? Or have they simply rewritten the rules of failure? The United States is not collapsing. It's transforming. From paper debt to digital code, from Wall Street to cyberspace. And in the process, it's building something far more powerful than an empire of soldiers. An empire of systems. Every stablecoin transaction, every treasury-backed token, every piece of blockchain tied to the dollar, it all feeds the same network. A network that turns debt into data, and data into dominance. In this new order, money no longer just buys things. It measures you, your habits, your movement, your trust. Debt becomes invisible, buried inside the code that keeps the system running. The world believes it's using digital money, but perhaps digital money is using the world. The US may never have to erase its $37 trillion in debt the old way, because in the digital economy, debt can be reborn as value. Tokens replace treasuries, algorithms replace bankers, and every click, swipe, and purchase helps keep the system alive. That's the digital harvest. Not a conspiracy, not a myth, but a transformation happening right now in plain sight. The only question that remains is this: when the harvest is complete, will you be one of the farmers or one of the crops?